Doug Burson here. Welcome back. The World Cup is coming next year, and millions of fans will be traveling, booking hotels, flooding cities, and looking for places to stay and gather. But here's something most people don't know. Homeowners have a little-known way to earn thousands of dollars completely tax-free during big events like the World Cup. And later in this video, I'm also going to share a bonus strategy that business owners can use to take this to another level. But first, let's talk about the opportunity every homeowner can access. When a World Cup match comes to your city, hotel prices spike. Short-term rentals get booked out. Fans, media teams, families, and event staff flood the area, and they need places to stay. That demand can turn your home into a high-value rental. But here's the part nobody expects. Under a legitimate IRS rule, you can rent out your home for short periods and pay absolutely zero tax on the income. This is not a loophole. It's not a trick. It's written directly into the tax code. The IRS decided that if you rent out your home for 14 days or less per year, that rental income does not need to be reported. It's not taxable, and it does not require any special forms. That's right, it's that simple. The money is completely tax-free. You can rent your home for 3 days, 7 days, even 10 days. As long as you stay under 14 days total in a year, it's all excluded income, tax-free. Now let's talk numbers. During major sporting events, rental prices skyrocket. Depending on your city, your home could command $300, $500, $1,000 per night, or maybe even more if you're near the stadium. Now here's what that looks like tax-free. If you have 5 nights at $400 a night, that's $2,000. 7 nights times $600, that's $4,200. What if you had 10 nights at $1,000 a night? $10,000, all of it. Tax-free, no income reporting, no deductions, no filings, just clean, legal money. Well, who can do this, you ask? Well, you don't need to be a landlord. You don't need an LLC. You don't need to run a rental business. If you own a home or even rent an apartment where subletting is allowed, you too can qualify. The only rule is simple. 14 days or less of total rental activity for the year. Go beyond 14 days, and now you're a landlord, and all rental income becomes taxable. So the 14 days is critical. Even if it's 6 months later, if it's in the calendar year, one more day, this thing falls apart. So how do we do this correctly? To take advantage of this World Cup opportunity, here's what you need to do. You're going to need to list your home on a short-term rental platform, Airbnb, VRBO, Booking, whichever you prefer. Maybe you know people, but you're probably going to have to do that. Track your rental dates and make sure you don't exceed 14 days. Number 3, save your payout records. Even though the income is excluded, keep your documentation. Make sure your platform collects the required lodging taxes. Most major platforms already handle this. Now we got to set fair pricing. World Cup demands will lift rates naturally. Just make sure you're comparable to similar listings so this doesn't look like you're doing something wrong. Documentation is going to be key to this if you ever get audited. Now, I'm saying you don't have to report it, but if VRBO sends you a 1099, then we're going to have to report this on our tax return and take it back off. It still won't be taxable, but there's going to be more compliance to it. So we want to make sure we have that documentation because most likely you're going to get something from VRBO. And I can tell you as a tax pro, if you don't put it on the return, you're asking to get audited. So we want to put it on and show it properly. So hopefully your accountant understands that. If not, find a different accountant. Now, here are the mistakes that can ruin this tax-free benefit. Like I said earlier, renting for more than 14 days. Another one, trying to deduct expenses related to those rental days. If you're not going to count the income, well, then you clearly can't count the expenses. Don't be greedy. Mixing this with long-term tenants, ignoring local city or HOA rental restrictions, these can all cause you problems. Stay within the rules, and this is one of the cleanest tax-free income opportunities available. All right, if you're going to do this, just want to add something here. Make sure you make them give you a big deposit because, let's be honest, they get all wound up. We want to make sure you're protected. All right, earlier I promised a bonus for business owners, and here it is. For everyone else, renting your home to World Cup visitors is an incredible tax-free income opportunity. But business owners, you have an additional layer you can use that so many people don't understand. Your business can rent your home for legitimate company events. Think planning meetings, team strategy sessions, marketing workshops, especially during the excitement of the World Cup. And because of the exact same IRS rule, those rental payments can also qualify as tax-free income to you personally, so you don't have to pay tax on it, but still get a deduction from your business. And that's a powerful 1-2 punch when structured correctly. But I've done other videos on Augusta Rule, so check that out. We gotta do it right, especially as us business owners, because some people get greedy and get in trouble, and there's been court cases. But the great thing is those court cases showed us exactly what the IRS is looking for. So if you do it right, this is completely legitimate, and it's tax-free money in your pocket. Now, here's why this year is especially exciting. The World Cup is happening right here in the U.S. That means if your city is hosting matches, training sessions, media teams, or fan events, demand for short-term rentals is going to explode. It's happening here in Kansas City where I live. And under a real IRS provision, Section 280AG, also known as the Augusta Rule, if you rent out your home for 14 days or fewer during the World Cup, that rental income can be completely tax-free. You typically don't even have to report it on your tax return as long as you stay under that 14-day limit. Like I said, it's written directly into the tax code. You can rent your personal residence for short stretches and the income is simply excluded. Just make sure you're charging a fair market rate, keeping good documentation, because that's what the IRS expects if they ever ask questions. So if a match is happening in your city, this is a rare chance to legally generate thousands of dollars tax-free simply by making your home available during the excitement. And for business owners, remember, an entirely separate layer for this. Your business can rent your home for legitimate company meeting or planning sessions, and that income can also qualify under that same Section 280. Your company gets the deduction and you get tax-free income. That's what smart planning looks like. So if you like my free Augusta Rule video, go ahead and hit the like button and subscribe. We're going to always have more things just like this, and we'll probably cover this more as time gets closer. So go ahead and do that, and thanks for watching. You'll see us in the next video.